Hello guys, glad to have you on board again. Today we're Thursday, so we're going to take care of some intraday scenario. We're just going to change a bit. Normally we're supposed to do the multi-asset intraday scenarios, but I kind of figured out that just a few of you guys are pretty much ready to handle this kind of educational content. So instead of doing something that will pretty much spread the knowledge that just a few of you will be actually using, I'd rather like to put some knowledge that you guys can actually use. So we're going to do some intraday, just like we do on Tuesday. We're just going to do the SPX. Single asset analysis, because most of you guys, and just recently a lot of you guys have been jumping in, so lots of beginners, and I rather like to have you trading what you need to trade, which is do some intraday to swing trades, just to get to know the basic of the strategy. Just stick to the essential, don't use anything else, don't try to customize the strategy, just try to take it all by itself, try to learn how it works, what's the psychology behind it, to limit the risk. So just get a glimpse of what risk limitation is, and as you really understand this thing, it takes a few months, like I said, and once you get it, then you can start moving to the next step, which is stabilizing the strategies, working around your psychology and personalizing stuff as it is. And just 1 year from experience, 1 year after you really got it, normally that's the stage you can start adding some spices like the volume we've talked about yesterday's and stuff like that. So always make sure you have a plan with your own coaching. Remember that you're working on your own. I'm just helping you with a huge distance. I mean, I'm on my home, I'm just talking to a screen each and every morning into a microphone, and you guys are just watching it. So the thing is that I would like to help you in person, but I basically can't, or hardly can. Just a few guys among you have been able to meet in person. That was great, by the way. I'll try traveling as much as I can to just meet you guys in person. But still, I can't meet everyone. So you've got to work on your own. I'm just assisting the best I can. But once again, have your own plan. Make sure that you understand what kind of profile you are, what your problems are, and how you're going to work around them. And make sure that, once again, you don't take the easy decision. There's always going to be like that. I mean, I'll just give you a quick example. Like you have some impatience problem. Let's be clear, everyone is impatient in trading at the beginning. But the most stupid, the easiest decision you're going to take out of this is you're going to say, all right, I'm too impatient. I cannot let the trade open. I cannot let go with my gains. I'm easily cutting the gains and let it go with the losses. Usual beginners biases. So like I said, the problem in here is not impatience. Impatience is just normal when you're a beginner. The problem is you generally say, all right, I'm impatient, so I need to take shorter time scale trades. I need to go scalping. I mean, no, what the fuck? That's definitely not the right decision. In here, you're definitely going the wrong way. The problem is impatience. How do you fight impatience? By stop looking at your charts in real time, using alerts and stuff like that. This is how you positively and actively fight against beginners' impatience. Definitely not going into scalping, but so many people doing that mistake. All right. Oh, and by the way, I just finished dealing with CQG. With AMP, and we're going to have some good things. So the thing is that I'll give you the details in Discord, obviously, but I'm just gonna give you the top of the iceberg in here. So the thing is that you guys are going to be able to to have access to the flat rate, which is normally a minimum deposit of 10,000, and I managed, so everyone will have this. All right, we'll all have the flat rate, even if you do have less than that. And once again, those of you who will want to start trading, scalping futures contracts, and like I said, just a few among you will really be able to, and lots of you will try and will not be fitting the psychology for this. Just to give you a glimpse of what this is, scalping requires a very rare type of psychology and type of profile. So like I said, it's just probably less than 10% of you guys will be fitting the actual scalper's profile. Even I myself was pretty much versatile. I can do pretty much whatever the fuck I want. I was able to scalp safely and But I handled that for like a year and a half, no more than that. I mean, after that, it was so exhausting. Psychologically speaking, it's so exhausting to scalp. You'll see this. I mean, at the beginning may sound easy. It definitely is way easier than intraday trading. The strategy all by itself is easy to get. But the problem with scalping is that it's freaking fucking hard to sustain. And that is where the problem will be in scalping. Anyway, we're going to do next week, as we said, I managed to deal with that, which is what I wanted. And the thing is that I also managed to deal with this, which is great. So the thing is that AMP trading is going to pay for us the 10 cents on coming and going trade route, which means it's a really 0.37 per side, so it's 0.74, and we're going to get trading the E-mini micro contract. So it's pretty much the cheapest I've ever seen. There might be some cheaper, but I still really don't know about, and they're certainly not as reliable as AMP clearing. I was trading with them back in the days and really had no problem. So really a reliable broker, really cheap in terms of prices. So whoever want to get to jump into scalping, we'll do it. I promised you we'll do. This is how we'll do it. I just wanted to make sure that we manage those fees first. Also going to try negotiating the fees for feeds. So I'm trying, because when you're going to ask for the S&P e-micro feeds, it's going to be $5 a month, if my memory's right. So I'm trying to negotiate this for you, so this could be free. It's basically you have no fees for the data and stuff like that. So the thing is that we're going to be able to trade right from our trading view charts using the CQG trade route. Just as you can see among the trading views broker, we're going to have CQG, which means you'll be able to log in here and get your CQG account logged in, your data feeded into trading view. So yeah, it's going to be great. It's going to be convenient to trade, but still, and I stand on this, just a few among you guys will be able to sustain scalping. Everyone will like it at the beginning because it's easy. It's stuff like that. It's gonna work easy for everyone, all right? But the problem is just a few of you guys will be able to survive in this long enough to make the living out of here. And let's be honest, it's freaking fucking hard. And just a very few among you guys will be able to handle this in a longer time scale. So if you want to try it out for general knowledge, I can understand that, but you really need to understand that you should have a plan with your own coaching. And like we said, if you're most likely fitted for a daily for a daily trade or stuff like that, and you're rather like not to lose and waste your time trying to learn scalping. It's great, you're going to have some knowledge, that's good. But if you think that you're going to get better at trading because you have general knowledge about trading, then let me tell you, this is wrong, really wrong. You'll have plenty of time later on to just bring some culture around trading and get yourself a deeper knowledge of this entire stuff. But first of all, you need to get your target. Your target must be bringing safe, low-risk incomes and regular and sustainable incomes from trading. And if you want to achieve that, you need to go straight to the point. And straight to the point is, if you're fitted to be an intraday trader, work around intraday trading and don't give a shit about the rest. You can learn the rest right after for your personal general culture or stuff like that. If you want to get some knowledge, you'll be able to do this right after, but you'd rather like to make some money first. That's the first goal, so focus on this goal and stop wasting your time. So if you're not fitted for trading, if you think it's good for you because of impatience, no, work around impatience and fuck up scalping. You'll have plenty of time to learn this later on. Right? It's easier, but it's a lot trickier as well. And the problem is there's a lot of risks in scalping that you guys don't perceive. You'll think it's easy, but it actually isn't. It just means the risks are hidden, and most of you guys will come across those risks later on, and hopefully without problems, but some will have problems anyway. So that's it. Sorry about that long introduction. Get back to work. So quick introduction regarding cryptos, and then we deal with the SPX on an intraday basis. And sorry for this long intro. So this is about cryptos, like I said. So the plan was to trade this area with aggressive 1 hour signals. That's exactly what's been happening. So 1 hour has been giving 2 bearish signals, a bearish reinforcement, and a bearish breakout. So all of those signals, I traded them. I'm now bearish in this market. The thing is that it was a 4 hour strategy. Remember, we said that anytime we get to trade below the context, we need to fucking profit take. So until the end of this week, the support context is at 6,700 approximately. So anytime we cross below this price, you need to look out for profit taking. You don't target anything below than that. All right, this is the area in which you look on your gains, and just watch out for any bullish signal to get the fuck out. We had an additional underlying information in between, which is this, which is just a range breakout. And as you can see, we do have 2 range breakouts on opposite directions in a short time scale. So those 2 are separated like, yes, 20 bars. Remember that a breakout is invalidated or is considered decreasing in its interest out of 40 to 50 bars. So let's say after 50 bars later than a signal, normally the signal is no longer at play. So in here, pretty great, 20 bars between the 2 signals. So we've got a mature range, which means we tried up, we tried down, we got normally the range boundaries have been set. So we can see that this is probably this bearish trend channel, and normally we want to see this one broken to the downside to reach out to our targets, profit take, and don't give a shit about anything else afterwards. All right, obviously that also says that if we breaks this to the upside, we're wrong, we're gonna have to take a loss, or at least to invalidate the scenario. At that stage, I personally have an average price in here, which means even if it invalidates, I'll take no loss. So that's the best case scenario. If it goes wrong, you don't lose any fucking thing. If it goes right, you take a nice gain. So when you're in that kind of position, you don't nearly give a shit about the market. So actually, do I have a look at the Bitcoin right now? No, because it's totally uninteresting to me at this stage. Either I get invalidated or I get profit took. That's simple as that. So this is how you would like to see this. If you're having a look at intraday charts, just like I've received a couple emails about this, like people telling me about this scenario because you guys are on board, and you're just having a look at whatever the fuck could go wrong. You tell me we've got 15-minute divergence, stuff like that. I mean, what the fuck? You shouldn't even care about 15-minute charts. Once again, we're doing a 4-hour scenario. So I can even understand if you say 1 hour signals, all right? I can understand that you might have some worrisome troubles or questions rising from 1 hour charts, but still, do you see any fucking thing in here? So yes, some people have been wondering about this 1 hour chart divergence. Should we profit take? These are gray signals. All it says is that we're probably going to have to digest the divergence, and we're probably going to sell again right in here. So that's exactly what's happened. We'll still have some bearish trending signal, so just let it go. We have bearish trending signal. Why would you profit take? Just lower the risk, lower the stop loss, and just let it go. If you can't do that, then stop looking at your charts and just having a look at the 4-hour charts and put some goddamn alerts. You know how to do this, all right? In here it's clear, we're trading a goddamn range, which means anytime we get to context, you definitely want to profit take. Are we clear on that? It's really simple. So you know where the target area, you know where the risk management area is. We're right in between, so why the fuck would you press any button? Do anything. Look at the 4-hour chart. We've been spending an entire momentum cycle to the upside doing literally nothing. So the bulls are not nearly in control. The bulls are just wasting their energy in here, and we're pretty much going to have a bearish momentum, I think, setting itself sooner or later. That doesn't mean we cannot do a tiny little bullish move in here. All I care is that we don't break up this bearish range. If we do, means the bulls are in control. We're out with no loss. All right, I think I don't need to do any more than that regarding cryptos. So you can set an alert on this, all right? You care about this thing, then just do this. Anytime we exit the trend channel, you can put an alert and use these alerts. They're meant to be used this way. They're built for this purpose. So if anything interesting triggers an alert, have a look at the charts. If nothing interesting triggers the alerts, then why the fuck would you have a look at real-time candles? They really do nothing but bringing some stress, some doubts, and whatever, anything that is absolutely negative for your trading. It will bring impatience problem, all those things that you need to avoid. All right, now set aside, we go SPX to do the intraday stuff. We're right into the expected plan. Remember that in here we do follow the 1 hour chart context trading that I gave you days ago, because that's the plan I gave you, I think, yesterday or even 2 days ago. The thing is that we're trading in here. I told you anytime we get to cross the 1 hour chart context is where you want to be looking at selling. So as you can see, we do have early signal. This one is going to close in 35 minutes, and I hardly think it's going to be handled by then. I think we might have just a couple more hours and eventually kind of an upper shadow candle to trigger later today, probably at Wall Street's open, and I think this is what I want to sell. So as you can see, signals are getting closer. We're probably going to sell soon. The thing is that if you anticipate that, and if the signal doesn't handle the candle close, you will probably just take a signal that never existed. So make sure you wait for the candle close. There's no need to rush. Especially not if you're beginning. You rather want to understand how the fuck risk management works rather than that. So don't try to be aggressive. It's not the goal when you're learning. So 1 hour, definitely the best for beginner. You wait for a 1 hour signal. Those who are a little bit more mature in trading, you want to be a little bit more aggressive, and you might want to trade 15-minute signals, which is a little bit more aggressive. You're going to get better prices, obviously, but you need to risk manage way better. It's going to be aggressive trading, so you know how to deal with this. The thing is that we do have a signal in here, all right? We're trading in context, so it's a 1 hour chart setup that we're going to try trading aggressively with 15-minute signals. As you can see in here, we might have one just right now, all right? It's compatible with what we're looking for. Does that mean it's going to work? Not necessarily, all right? And like we said, unless we do have the 1 hour chart confirmation, this signal is just an aggressive 15-minute signal. So for experienced traders only, because it requires to rapidly react if something goes wrong. But this is definitely the kind of signal that may work fine. But you still require a little bit of patience and stuff like that. But this is the kind of signal you can trade. I still recommend for you to wait a bit, but still that's something that is tradable. And by the way, I think I'm just gonna go take it. All right, that's done. So just dipping a toe once again. Aggressive trading means lower and tinier position sizing. Exactly what I just done in here. Just executed a tiny position just in case anything had to fall apart right in here at the end of the European session. But I still pretty much expect that we're going to go higher later on. Right? It's just dipping a toe. So if anything has to fall apart, I'll be in there and don't have to be following prices. So first trade, because I do have a signal, it's definitely following the strategy, and I'm anticipating the 1 hour signal. I'm totally aware that it will probably take an additional 2 to 3 hours. That we're probably going to go a little bit higher than that. The momentum is pretty solid, so I kind of expect that we might have a divergence to set itself later on. So it's probably going to be a better signal afterwards. But anytime we get to do something like that, all right, pull back into the previous resistance, I'll probably secure this trade, and if it gets invalidated, I'll obviously trade the divergence right after. So that's the kind of stuff I'm expecting for us to do, as we do have a strong bullish momentum at the moment. We broke the previous high, so the bulls are in control, which means I'm a little bit aggressive in here. Therefore, I'm obviously reducing the position sizing. My stop losses are, I don't put stop losses, let's be honest, all right? But I do have invalidation alerts, so this is what I'm going to be setting just right now in front of you. Once again, if you're beginning, don't even consider removing your stop losses. You do trade with stop loss when you're beginning. It's because I'm a professional. I know how to handle my stop losses. I don't put them in the order books, but you don't know how to do this, so you clearly don't do that. All right, 15-minute invalidation trade. Oh goodness. All right, I want a notification on app. Yes, and I want a clock. All right. So that's how it is. If we end up going in there, then I think something goes wrong with my trade, but I don't really even think that's what's going to happen. So what do? I just, well, I'm going to put it a little bit further than that. So I just take the, some people generally tell me, Phil, I don't know where to put my stop losses. Do you have any trader's tip that you can share? So it's simple as that. When you don't know where to put the stop losses, there's an easy rule for you to do this. Two ways. Either you use the ATR, average true range, and you set 3 ATR for a stop loss. All right, this is a standard indicator from TradingView. Good to use this one, like the ATR. You can use whatever periods you want. I generally take 50 periods, which is representative of this thing. And you say, for example, all right, the current ATR is 2.5, approximately 2.6. You set that 3 times at least, right? So it gives us approximately in here, it's an 8. All right, so 8 points of stop loss. So you say, okay, I'm entering in here 28.35. I have to add 8 points. So the minimum stop loss is 28.43. All right, minimum stop loss, 3 times the ATR. All right, that's the minimum. Let's say 3 is minimum. 4, 5, 6. Obviously, the higher you put, the lower the risk. All right, but definitely the lower the position sizing. All right? You know how to handle the risk leverages. That's how you do. All right, if you bring up one leverage, you have to bring another one down, because if you do put every risk leverages up to the maximum, then you're taking way too much risk, and you're probably going to take the loss that comes along with it. All right. So that's how you see. As you can see, I put it large. The other solution, rather than add here in ATR, is to use the trend channel's amplitude. Like, for example, you take the trend channel's width and you just double it. All right, you take your entry price and you add the size of your trend channel to the upsize. Pure and simply this that I will just do in here. All right, if we go there, I think it's not even worth remaining in position in there. So that's it for today. Remember that the plan is aggressive traders will be taking 15-minute signals, but only those of you who have at least 6 month minimum. I strongly recommend at least a year using my strategy to get to do this. 1 hour is where all the beginners will look out for the signal. As we saw, the signal is really coming closer, but still requires a fucking validation by a candle close. So be a little bit patient. If you are a beginner, and trade safe. We do have everything we need for a counter-trendy entry. Remember that the context is a bullish range, so you know what to deal with it. You know what the rules are. You're never ever going to target anything more than 61% retracement, and you're not targeting support breakouts. You have a strong support in here. This is where you're going to make your first risk management. All right, this is where you're going to do the first validation or anything like that, all right? But this is where your trade gets to be confirmed, all right? So we're probably going to get to trade this area. You see that we're probably going to confirm this with a trend channel. So going in there is where you need to secure the trade, all right? In here, either you pay for your stop loss, you reduce the stop loss, you partial profit take, you do whatever the fuck you want. Remember that you've got multiple options. You follow the PDF manual's guide for this. If you want aggressive trades, you're probably going to do nothing but reducing the stop loss. If you want a moderate profile risk management, and you're probably going to lock on 25 profit and let it go with the rest for the maximum target. All right, as simple as that. You don't target anything more than this 61%. So in here is exactly the 61% retracement, and we see that it also comes along with this support area, previous support area. So you're definitely not targeting anything below this price. All right. That's it. Normally you should have the intraday plan. That doesn't mean that this will happen. All it says is that this is how you trade. When you speculate, you don't really give a shit about what the fuck is going to happen. All you care about is whether the plan triggers, and once it's been triggered, how do you risk manage? That's simple as that. Once you take the trade, let's assume the trade will trigger, all right, in the following hours, or in the following hour, or the following hours, all right. The trade triggers. What's next? Then it's a binary choice, all right? It's either you're going to be validated or invalidated. It's simple as that. The invalidation is your stop loss. The validation is you get to reach out to the bottom of the context channel, for example, all right? Getting into this area is where you're going to get validation. pure and simply, right? You get to reject this area. We're probably going to try trading this support later today or tomorrow. This is where you reduce the stop loss, and whenever we break down this support is where you get confirmation. So this is where you can start eventually reinforcing, but we're not going to be doing this. All right. Anyway, we'll manage this trade together in Discord. Obviously, that's an educational trade. Everyone can take it whenever the signal will trigger, obviously, and we'll manage this all together. So this one, we'll take care of it all together. I'll give you any steps of risk management and stuff like that. All right. So bye guys. Wish you a good trade if you take it. Remember that if you anticipate the signal, I don't like it. If you take the 15-minute signal fully leveraged, you really don't understand how it works. This is an aggressive trade. Being aggressive meaning less and tiny position sizing. Less leverage, far less leverage. Being aggressive is just how you get better gains with the same amount of risk. But you just need to put the risk somewhere, and it's a position sizing, right? The position is going to bring more gains, so there's no need to put more leverage. All right. Rather than that, you do the opposite. You take tinier position sizing. All right, and you secure fast. Like I said, it's a 15-minute trade. So anytime we get to retrace close to the trend channel is where I'm going to look on the gains. Sorry, when I'm going to risk manage. So as simple as that. All right. Anytime we get close to this thing is where I'm going to partial profit take. Kind of a 3-minute. Anytime we go there. And show you how I'll do this thing. All right. Anytime we get to trade the bullish context in here is where I'm going to profit take. I'm going to reduce the stop loss. Right. It's just how it is. And as you can see on the 3-minute time frame, we're already ready to surge again. So it's not the best case scenario in here. Right. I think the bulls are going to just rise again. Well, that's exactly what they do. Right, so no worries. That's a 15-minute trade. So once again, I'm going fully aggressive to have a look at what the hell happened in 3 minutes. The 15-minute signal is still there. All right, it can take a few candles to try and access, and then it will probably reverse. All I care is being able to manage my trade. It's really simple as that. So we'll follow this one all together in Discord. Sorry, I'm talking for nothing. See you guys later. Tomorrow we'll take care of swing closes and see how the swing trades have been behaving this week. We're obviously going to talk about the gold, but this is for tomorrow. Bye, guys.